Thanks, Tim. Thanks for the opportunity. If you can go ahead and click through a couple of slides here. Okay, that's good. Thank you. Babylon is a rapidly growing specialist mining services provider. We're headquartered in WA with operations in West Australia and Queensland, the two resource-heavy states. We specialize in three areas, three core businesses that we operate in. Specialty rental, which is focused on dewatering and temporary power generation. Specialty industrial services, which is based off of high pressure pumping and blasting. And then diesel maintenance services, which is focused on maintenance of large engines and rebuild of complex machinery. The three segments are all supported by a shared skill set of our workforce, our shared facility requirements, and our operating processes. We've built the company off the back of having an experienced set of tradesmen and core competencies, facilities, and processes that allow us to touch the client in several different points to maximize value of our investment in our facilities and people and our equipment. We try to leverage our experience and our workforce to be able to maybe where we have an in with the client for a diesel maintenance point of view, leverage that relationship to then begin to rent equipment or industrial services, and we've been able to successfully broaden our scope across the maintenance purse that our clients have. You can go to the next slide. Just a quick corporate snapshot. The key takeaways here is the company was founded in 2017, and our first operations were only in financial year of 2018. We started from a very low basis, very low revenue, and we've had tremendous growth over the past couple of years, underpinned by, I guess, the past couple of quarters, we've had tremendous revenue growth and operational cash flow growth, operational cash flow positive. And the other item is we have one significant shareholder who acts as a strategic advisor to the board. Entities controlled by Jeff Lord. He's been as a significant shareholder since the beginning and has supported the company throughout the acquisitions that we made for growth. We're still a small guy. We have a long way to go in a very large industry. We go to the next slide. I'm not going to go through the entire team, but as I have released in the past couple of weeks with our operational updates, we've gone through a rejuvenation of our executive team. And with that, it's been a bit of a growth story, whereas early days, very entrepreneurial and having skill sets and team members there for explosive growth. We're now transitioning in more experienced, larger business types to really underpin the business for future growth, where we're embedding processes and business practices to improve our profitability. We've also been fortunate in that the past week, we welcomed on a new independent non-executive board member, Ms. Louise Bauer. She's come in to complement our existing board with another resource experienced background to be able to underpin our future growth. Yeah, next slide, please. It's been a quick journey. Since 2017, we were founded. We relisted in January of 2018, again off the back of very low revenue. But in 2019, we completed our first acquisition of Prime Power Queensland, which gave us operations in Mackay. And that's been a significant investment on the diesel maintenance side of the business. It's brought forth a tremendous client base on the East Coast, allow us to diversify a bit. In 2020, we were able to embed the acquisition, provide positive EBITDA, and really start to grow our market presence. We completed our next acquisition, Ozblast, in March of 2021, just this end of this past financial year. And with that acquisition, our major finance provider, NAB, has been on board to grow with us, and they gave us another round of financing package to be able to support our future growth. We closed the year with significant revenue growth, and we've actually then now opened up the next quarter off the back of that growth to continue going in the positive directions. Go to the next slide. We're a small company, but we deal with the big guys. Our largest clients are BHP, Rio, FMG, Alcoa. Efforts over the past 6 months have resulted in greater spread across the commodities. Iron ore and coal still dominate our client base, and that's what got us started, but we've been successful over the past 6 months as we transition into larger opportunities in alumina, bauxite, gold, and lithium. Again, having various touch points, various business segments, we're able to approach a wide suite of clients to be able to get a foot in the door and then bring the other services we provide in and grow into those areas. We've made a conscious effort to try to spread both our mineral base and our geographical base. Currently, revenue is split roughly 60-40 East Coast, West Coast, and although iron ore and coal still dominate with greater than 50% in total for those two minerals, we're starting to see tremendous growth in the other areas. And that's something that our team still continues to push. And for us as a small company, we don't want to have all of our eggs in one basket, and make sure that we're able to kind of spread our risk across the commodity sectors. Next slide. This past financial year, I guess, consumed a lot of effort and a lot of hard work to try to position the growth of the company going forward. The work that was done in 2021 that'll benefit going forward was acquisition of assets for our specialty rental division. Those assets have been deployed at a great extent now here in 2022. In the FY 2022, and we're starting to see revenue in various new client sectors for those. So we're quite happy with that. We've also, a lot of effort went into the acquisition of Ozglass, and it's driving growth in the higher margin industrial services area. That is a standout area for us, and we're positioning ourselves to truly try to grow that with bringing on a dedicated business development person in that business, and really try to push the higher margin services back to our existing clients. We're very excited. There's lots of opportunity with that business, and we're seeing a tremendous engagement with clients, and we're expecting some key wins to come through for the calendar year 2022 going forward that'll really solidify what we're trying, our efforts in the past couple of months. And then lastly, in this past financial year, we invested quite significantly in a service exchange model for our diesel maintenance business. That business consumes quite a bit of cash and a lot of effort to build up the service exchange engines. Those engines really position us for a quick turnaround for client needs, so we're able to dispatch engines quicker. And then also it positions us for recurring work, because as we are able to provide clients with engines in a very quick basis, they reduce their downtime for their machines, and also we get their return engine coming back, which leads to the next piece of business and the next piece of business to roll forward. We feel like that investment has brought recurring opportunities, and we're starting to see the payoff here in this past Q1, and we're starting to see it going forward as well through the year. So we're quite happy with that investment and with the efforts we put forth there. Next slide, please. You can go ahead and skip again. Growth prospects. Rental will continue to focus on the longer term rental opportunities. Our business focuses on the complex dewatering and temporary power provision. We're not a off-the-shelf rental type company like a Coates or an On-Site or those type guys. We tend to focus on the more complex installed base that kind of gets more ingrained in client sites. It takes 6 to 12 months worth of work, worth of commitment to the client. We're continuing to push that as we grow our asset base. We're getting uptake there. We now have assets deployed and people on site maintaining those assets and acting as a service provider for dewatering at multiple sites throughout WA. We feel like we're well positioned there, and we have a plan to continue to grow our rental fleet, and we have some capacity within the existing capacity within our financing with the banks to be able to grow that business as well. Next slide. Diesel equipment maintenance. Like I said, we have multiple maintenance contract opportunities we're working through with clients, and these are off the back of the service exchange program. Investment in these large engines has allowed us to focus on recurring works, and as we've won those projects, we're now getting ingrained in clients' future diesel maintenance schedule where we have visibility. So we're becoming less of a reactive company and much more of a proactive service provider where we're ingrained with the clients. We feel like that visibility has allowed us to invest in the people and the facilities that we need to grow there, and we're excited with what's coming in the pipeline in our sales funnel with the opportunities we're being asked to address. We're transitioning in the diesel maintenance area from a small provider to a medium-sized provider. Our largest competitors are the likes of a Westtrack or a Hastings or a Cummins, the OEMs, and we're moving away from the small reactive shops towards the big end of town. We have a long way to go, and we don't really want to be that massive provider, but being that medium-sized business, we're able to provide the clients with what they need and the proactive solutions with the service exchange program, but also a bit more oomph behind us. Next slide. Specialty industrial services, the Allsblast acquisition, the growth prospects there are tremendous. We're making a tremendous effort there to push with sales and marketing efforts, and also being able to use our contacts across our existing clients to push those services into the market. That business is the highest margin business for us, and that's what we're trying to continue to drive forward and see that as a tremendous growth opportunity going forward. Next slide. We have ambitious goals. We want to, have a large, scalable company. We want, again, lofty goals, 100 million plus profitable turnover in the next couple of years. That'll come through both organic growth and acquisition opportunities. We have a plan with our existing businesses to get us part of the way there, but we will also look at the right opportunities as bolt-ons going forward. Next slide. The outlook, in summary, the key drivers haven't changed for us. This is a massive market, and we're still a minnow in the massive market. So there's lots of opportunity for us to build a business and build a nice, profitable business off the small bits that the big guys overlook. The demand for specialty services and rental equipment will continue to increase. We operate in operating mines. We're not dependent on greenfield opportunities, and as long as people are moving ore, we need to be, our services are required. COVID restrictions actually help us with lengthening of lead times for specialty equipment in the country, and being a service provider set up with all the majors, we're there as an alternative where other larger organizations may struggle with people and the ability to get the work done. We're a bit more nimble and able to come in and fill the gaps. There is a high barrier to entry for other operators. We feel like we've been through the hard work so far in the past couple of years, and we feel like we're well positioned. Our workforce is locally based. We're only just over 50 people, but they're based in Queensland, they're based in WA, and we have a core set of skills in our workshops, which we're extracting value of. And we're very fortunate we have a supportive lender in NAB who continues to work with us on our growth. One more slide. And I'll leave it at that. And Tim, if you have any questions, I'm happy to give them a crack.
Thanks, Michael. We've got some questions. Electrification is a theme here in terms of the questions replacing diesel machinery. How do you adapt with your workforce?
Well, we do quite a bit of work right now with the electric driven trucks. And that's not the true electrification like you're talking about, but electric driven trucks use a big diesel engine to drive the alternator and actually drive the truck. So we're doing that work now. But even with the true electrification, mechanical parts require maintenance. And whether it be an engine, a transmission, a wheel end, we're doing those critical bits. And whether the power might come from electricity or by burning diesel, there's still the moving parts that need our services.
And there's a question further on that theme in terms of hydrogen and the critical minerals sector. Can you adapt and move into those areas as well?
Yes, because of the specialty nature of what we do, being involved in the engines, and that's our core competency is the big diesel engines. We're starting to have some involvement with guys who are wanting to use hydrogen and other alternative fuels. You need people who are nimble and open-minded to be able to work with them, to use our knowledge and our capability in our workshops to be able to support that transition. Because the big guys, yes, they will invest in it. Yes, they will go that direction, but they have a much bigger ship to turn.
And where do you see the most growth potential within your existing businesses?
Pure dollar wise, the diesel maintenance side it's a massive business there. But from a profit point of view, the specialty rental and the industrial services is what we're pushing. We need the critical mass, and we want the critical mass of the diesel maintenance business that underpins the business, that helps us have the nice recurring work for our staff and our facilities. But the growth and the profit growth will be through the specialty services and the specialty rental that we do.
And finally, how advanced is the new Perth workshop?
We're hoping to have it ready at the end of the financial year. It's a purpose-built facility. It will allow us to significantly increase our capacity. And funnily enough, talking about it, it's starting to attract workforce, because guys always like to have a shiny new workshop that's purpose-built for what they do. So we feel like the stars are kind of aligning to where we'll have something exciting here at the end of the financial year to step into the next financial year and really hit our growth strides using that facility.